What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the brutal volatility that we saw today in the markets. And today we had yet again another red day across the board when it comes to the indices. And something that is worth pointing out over here, guys, about today's trading session is that today we saw, I think that probably the lowest volume that we have seen throughout this year on one single trading session. Very, very low volume because the European markets were closed. And usually, on average, the very low volume ends up benefiting the bulls, but that wasn't the case today because Apple ended up having a red day throughout the trading session, and you guys know that Apple is a very important stock when it comes to the US stock market. It represents 7% of the total market capitalization of the S&P 500 and 14% of the total market cap of the Nasdaq 100. So the Russell 2000 went down today 0.74%. Nasdaq goes down today 0.14%. Dow Jones goes down 0.11%. And the S&P 500, it pretty much broke even. We can make the case, but it ended up, from a technical standpoint, having a red day because it went down 0.02%. Crude oil goes up 0.88% and closes the trading session at around $108. Gold goes up 0.34%. Silver goes up 1.30%. And the 10-year Treasury yield, 3%, is starting to act like a magnet, guys. So TNX goes up today 1.20% and closes the trading session, or the 10-year Treasury yield closes the trading session at 2.86%. The VIX went down today, guys, despite the fact that we had a red day across the board. So the VIX went down today 2.30%, and it closed the trading session slightly above 22 points. Keep in mind that on Thursday, we're going to have Mr. Jerome Powell speaking twice, I think, at 11 a.m. and also at 1 p.m. Eastern Standard Time. And you guys know the rule, the golden rule. Whenever Jerome speaks nowadays, it's time to buy puts. So keep that in your mind for the ongoing week. When it comes to the earnings, the most important earnings that are going to be reported throughout this week, guys. Tomorrow, before open, we have Halliburton, we have Johnson & Johnson, we have Lockheed Martin. We also have tomorrow Travelers, a very important member of the insurance industry or sector. And tomorrow after close, guys, a very big company. This is a company that, depending on whatever is going to be reported tomorrow, could be moving the markets. Netflix after close. I took a successful trade on Netflix today. We also have IBM. We also have Interactive Brokers. What else do we have tomorrow after close? Those are the most important earnings. Wednesday, before open, Procter & Gamble, Abbott Laboratories, Nasdaq, the index itself. What else do we have before open? That's it. After close, Tesla, another company that is very likely to be able to move the markets depending on whatever Tesla is going to post. I think that Tesla is going to post once again a record earnings report. We also have Alcoa, we have United Airlines, we have Lam Research. What else? Whirlpool, Equifax, and Crown Castle, an important member of the home builders sector. Thursday, before open, American Airlines, AT&T, Nucor, Dow. This is a very important chemical company. What else do we have on Thursday before open? That's all I can see. Thursday after close. Jesus Christ, a lot of people holding the bag over here, guys. A snapshot. We also have Boston Beer. And on Friday, we have Cleveland Cliffs. We have also Verizon's, Lumberger, and American Express and Newmont. SAP and Kimberly-Clark also post earnings on Friday, as well as Regions Bank. So this is going to be a very exciting week. And most likely, guys, whatever is going to happen with the major indices is going to depend on the earnings reports of Tesla and Netflix. Mostly, it is going to depend on the commercial guidance that these two companies are going to be posting. If we take a look at the sectors of the market, what happens over here? And what do you know, guys? Once again, the energy sector led the way today, goes up 1.47%. And something that is worth pointing out over here is the fact that defensives were the laggers today, guys. And why? Well, because utilities went down today 0.54%, an ultra defensive sector. Consumer staples goes down today 0.82%, and healthcare goes down 1.10%. And check this out, guys. For the most part, 9 out of 10 times, when the financial sector goes up along with the tech sector, we usually end up having a green day across the board. And why this wasn't the case today? Well, because of what I just told you guys in the introduction of this video. Apple went down today, and on the other hand, we had Microsoft, Google, Amazon going up. But as I just told you guys, the weight of Apple inside both the S&P 500 and the Nasdaq 100 is so important that despite the fact that other companies did the heavy lifting, very important companies, market cap wise, such as Microsoft, Amazon, and Google. So those companies did the heavy lifting, but that wasn't enough, guys. Apple went down, and we ended up having a red day across the board, despite the fact that the two most important sectors of the markets went up today. Okay, what about the trades that I closed in today's trading session? Very active trading session for me, actually. So Netflix, guys, I purchased the $330 call that expires in September. I paid it this morning $4,165, and I ended up closing this position as a day trade, and I was paid $4,315. I ended up making over here $150. And what do you know, guys? I ended up buying puts of the S&P 500, SPY. I took a very nice technical trade over here. So let me show you. So today I purchased two puts, the $439 put that expires in May, and I paid for these two contracts $1,856, and I ended up locking in the profit by being paid $1,996. I made over here $140. I actually got these puts when the S&P 500 fell for second occasion, I think, at 4,405 points. I am going to explain to you guys the trade that I took over here in just a second when I go over the S&P 500. So over here I made $140, and I also bought back, guys, 3 cover calls that I had sold of Robinhood Market. So let me show you over here what happened in the case of Hood. I had a nice day. I can't complain about this. So on April 13, I sold 3 cover calls of Hood, the $13 call that expires in May. I was paid $264, and I decided to buy back these 2 contracts today because Robinhood was showing a very good support at around $11, and I paid $180. I made over here $84. So in summary, today I ended up making $374, guys. I had an acceptable trading session today. S&P 500. Take a look at the one day, 1 minute chart of the S&P. Such a volatile trading session on a very low volume, guys. That is something that is worth pointing out. For the most part, when we have very low volume in the major indices, we usually have the so-called low volume melt-up operation, but that wasn't the case today, guys. Despite the fact that we had a very low volume, extremely low volume, we saw a lot of volatility today. The S&P 500 was an absolute roller coaster. So the S&P fell today, guys, at 4,408 points on 1, 2, 3, 4, 5, and 6 occasions. I actually purchased the puts that I just showed you of the S&P 500 at around 10:47 a.m. Eastern Standard Time when the S&P fell at 4,408 points for the third occasion today, and it ended up being a successful trade. So if checking on the 1 day, 1 minute chart of the S&P 500, we can make the case that obviously the most important resistance for the bulls tomorrow is going to be obviously 4,408 points. And the bulls were able to hold as lower support on 1, 2, and 3 occasions, 4,370 points. So in the most immediate term, both bulls and bears have their tasks very, very well defined. To the upside, resistance-wise, we are talking about 4,408 points. And when it comes to support, the main task for the bears tomorrow is going to be 4,370 points. If I pull up here a 4-hour chart of the S&P 500, the RSI is at 38 points. It is a bit low, but not very low. So we can make the case that we still have more room to the downside over here. Needless to say, the S&P is trading as of now below all the moving averages. So obviously the bears are in absolute control of this index. So let's say that tomorrow 4,370 points happens to be broken to the downside. What would be the next important support for the bulls? I am thinking about 4,333 points. This is a previous area of support back from mid-October of last year. And if the bulls happen to be able to take on 4,408 points, they have to try to take on the 180 SMA on the 4-hour chart at 4,437 points. So basically, anything could happen in the case of the S&P 500. Nasdaq 100. What is going on over here with the Silicon Valley guys? By the way, the NDX was the only index that was able to pull off a green day today, guys. Not much, but it went up. The NDX goes up today 0.13%, and it closed the trading session at 13,910 points. So, from a strict technical standpoint, it is positive that the bulls were able to close the trading session today slightly above 13,900 points. This is a very important spot. We are talking about a previous area of support that acted on 2 occasions back in late January. So if the bulls, or when it comes to the most important task that the bulls need to carry out in tomorrow's trading session, that is going to be taken on 14,250 points. This is an area of resistance in which they have felt on 3 occasions throughout the latest week. And in the case of the bears, they obviously need to take on 13,900 points and feel the next cap to the downside down to 13,500 points. This is a previous area of support back from mid-March. And as I just said, in the case of the S&P 500, the RSI of the NDX is at 36 points. It is a bit low, but not very low. And check this out, guys. If we take a look at the relative strength index chart of the NDX has bounced back up exactly at 19 points. So whenever the Nasdaq 100 has gotten extremely oversold for its relative strength index to hit 19 points, it has bounced back up. And as of now, the RSI of the NDX is at 36 points, guys. So obviously, we are trading, or the bulls are trading below all the moving averages. So we still have more room to the downside over here until, or let's say, until the bulls can reconquer the 180 SMA on the 4-hour chart. We still have plenty of room to the downside. And the first stock of this video is going to be none other than Twitter, guys. And oh boy, is Twitter trending as of now? Oh yes, absolutely. It is trending as of now a lot because of the situation of Elon. So Twitter goes up today 7.48%, and it closed today's trading session at $48.45. And you guys already know the drama. Elon wants to take over Twitter, and the board of directors, they don't want to sell the company. They don't want Elon to take Twitter to the private markets. And the board of directors of Twitter is carrying out as of now a poison bill, which is a legal mechanism that prevents building stake above certain percentage. So what is going on? What is going to be happening over here at the end? Who knows, guys? I think that if Elon happens to give up his idea of taking over Twitter, this stock is going to collapse, absolutely. And if Elon happens to be successful trying to take over the stock of this company, he's offering 54 bucks per share, guys. So in that case, Twitter still has a lot of room to the upside. But in the meantime, what trades could be taken over here on Twitter. So I have two trades, guys, a bearish one and a bullish one. Put options, $48 is a very important spot for Twitter. This is a previous area of resistance back from early December and also back from late November of last year. So I'm thinking that if the bulls of Twitter cannot hold, are unable to hold $48 as support, we have a nice leg down to $45, guys. $45 is an area of resistance in which Twitter failed on multiple occasions back in December. So watch out for this support being broken to the downside, because in that case we could be grabbing some puts, no problem. However, and I already told you that $48 is a very important spot over here, guys. If the bulls of Twitter manage to hold $48 as support, watch out for another push to the upside up to the 200-day moving average at $51.20. Because from $48.50, $48-ish up to the 200-day moving average at $51, this would be a 5% profit trade. And if we take a look at the RSI of Twitter, it is at 59 points. We can make the case that Twitter is neither oversold nor overbought. So clearly, guys, this could go either way. And the second stock of this video is going to be a stock, guys, that came to my radar because of the dividend yield that this company is paying. Absolutely unbelievable. 35 points of dividend yield for this company, ZIM Integrated Shipping Service. So this company went up today 3.01% and it closed today's trading session at $56.83. So when I first saw the dividend yield that this company is paying, I thought to myself, like, okay, this must be a non-profitable company, speculative company, and they are just, paying an extremely high dividend yield in order to attract shareholders. So I take a deep look at the balance sheet, the income statement, and the cash flow statement of this company, and I couldn't believe it, guys. So revenue growth, constant revenue growth throughout the last 4 years, an improving operating income, a very positive cash and cash equivalents versus long-term debt, and also a positive CFO. So I was like, wow, how are these guys paying this dividend? Take a look at the last dividend payment that this company executed, guys. $17 per share. Unbelievable, guys. Back on March 22nd. So this is a profitable company, a company that is growing at a very acceptable pace. And on top of that, they are paying a very nice dividend yield. So I don't know, maybe this is something to think about. When it comes to taking a trade with ZIM Integrated Shipping Service, watch out for $55. This company went up today 3.01% and it closed today's trading session at $56.83. Watch out for $55, as I just told you guys, because this is an important spot. We are talking about a previous area of resistance back from early November and also a previous area of resistance back from early September of last year. So I'm thinking and taking into account that the RSI of the stock of this company is at 50 points, very healthy from a technical standpoint. ZIM isn't oversold, not overbought. Any process of consolidation slightly above $55 or $56 could be a sign that the bulls are gathering momentum in order to try to make another push higher to fill the next important gap up to $62. $62 is the previous area of resistance back from early December and also back from mid-September. So if we were able to take a trade over here from $56-ish up to $62, if I can speak today, this would be an 11% profit. Now let's go ahead and take a look at Bank of America, a very important bank, my neighbor, because I live here in Charlotte, North Carolina. So Bank of America, they posted earnings today. Back goes up today 3.41% and it closes today's trading session at $38.85. So I don't wanna struggle with the live news tab of Thinkorswim. So what happened here earnings wise? So EPS came in at 80 cents versus 75 cents estimate. So they beat on EPS by a wide margin. Okay, revenue came in at $23.23 billion. billion, beating the estimate of $23.13 billion. So they beat on both, guys. EPS and revenue. Okay, some other details that are worth to be pointed out over here would be Q1 net interest income came in at $11.57 billion versus $11.65 billion. So they beat when it comes to this metric, net interest income. What else do I have over here? Okay, Q1 global market sales trading revenue fell 7% to $4.7 billion. We can make the case that during the first quarter of this year, the markets were going through a horrible correction, and that's the reason why the trading revenue of Bank of America decreased. And this is very important over here, guys. So Bank of America said that they see very minor direct exposure to Russia-based companies, and the company's teams were able to navigate through sanctions. So apparently the exposure that Bank of America has when it comes to the war in Ukraine is very little, or maybe, none at all, which is obviously good news because we don't know for how long the war in Ukraine is going to last, unfortunately. So watch out over here, guys, because the stock of this bank is approaching a very important spot in technical terms. $40. We are talking about a former area of support back from mid-August that coincides on the 4-hour chart with the 50 SMA. So I'm thinking that if the bulls of Bank of America can take on $40 and good volume and momentum, take a look at the RSI. It is at 50 points, very healthy from a technical standpoint. They are going to be able to fill the next important gap, or the other important gap, up to $42.57, which happens to be a previous area of support back from mid-January, also back from mid-December, and this is at the same time a previous area of resistance back from August of last year. So if we were able to take a trade on Bank of America bursting above $40, let's say from $40.10, $40.15 up to $42.50, this would be a 6% profit trade. And the last stock of this video is going to be Enphase Energy. And in the case of Enphase, let's see what happened over here today. So the stock of this company goes up 0.25%, and it closed today's trading session at $190.03. And mind you, guys, this company is posting earnings on April 26th. And on the last two occasions that Enphase posted earnings, the stock of this company went ballistic. So who knows if this is going to be the third occasion in a row in which the stock of this company goes on an absolute tear after having posted earnings. I am going to be keeping a close watch on Enphase, guys, because $180 is a very interesting spot. We are talking about a former area of resistance back from early March, also back from early February, and also back from August and September of last year, that is coinciding with the 100-day moving average of this company, of the stock of this company. So I'm thinking, guys, that any visit of Enphase down to $180, and taking into account that the RSI is at 43 points, this is an area in which this stock is very likely to come across with buyers. So from $180 up to the 50 SMA on the 4-hour chart at $198, which also happens to be a previous area of resistance back from early August, we are talking about 9% profit trade. So watch out for Enphase Energy paying a visit, or even better, a quick visit down to $180, because I think that this is a spot, a technical area in which the stock of this company is very likely to bounce back up. And with Enphase Energy, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish. so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Tomorrow I have a surprise for you guys, so be there tomorrow, guys. See you.